want to break down how we use the daily time frame to identify and distinguish who is showing dominance on the market, right? So price action, when you look at it, it seems extremely random. It seems extremely unstructured and unpredictable. But the longer I trade, the more I realize there's patterns everywhere in the market is constantly giving us opportunity to absolutely crush it. But to identify it and distinguish it, we must be able to understand objectively, right, without predicting anything, who is in control in the market, who is showing dominance. And we do this through critical levels of interest. So today in this video, I want to break down, 11/27/2024, and how we identified a beautiful trade off the market open. I want to break down my 3-step criteria that I trade each and every single day. And more importantly, I'm going to break down to you the pre-market plan, how I came up with it, why I came up with it the way I did, and how and why it is extremely effective to use important daily time frame levels. Right, so the day over here is 11/27/2024. Critical level of interest 617. Don't worry, I'm going to show you where I got this information. So don't worry about it. And more importantly, if you want to join my army, click the links below. Right, I have a special going on for the next 4 days, Trader Boot Camp. You can join the team, $100. You get 12 months access, a part of the High Performance Trader Army. Right? That's access to the Discord, access to all of our online courses. 4 more days, take advantage now or be forgotten about, right? So let's break into the lesson. So pre-market plan, critical level of interest is 617. Bullish scenario, I'm watching for buyers to show strength above 617 in end of day, right? That's previous day close. For longs targeting previous day high and pre-market high. Bearish scenario, I'm looking for sellers to defend 617 along with open print and end of day for possible short plays targeting previous day low in 598.80, right? Very simple graphical presentation here showing the importance of a main level of interest, 617. Josh, where did you get this level and why? Well, that's a phenomenal question, right? So if we come over here to TOS and we break out the daily time frame, we have to give you a little more context before diving deeper into it, right? So the market has been very bullish, yes. Now, I'm looking at price action and I'm going, okay, what was the previous all-time high? Because we just broke it, right? And that is 617. You can see this level right here, and if you put your cursor on it and come up here to the upper left hand side corner, you're going to see the date, the open, the high, the low, the close, right? All your critical levels are literally displayed for you once your cursor's above the candle. I didn't know this for the longest time, but look at this. My cursor's on the candle. You come over here to the upper left hand side corner, you're going to see the high, 617. Why is this important? Because this level, buyers cannot push price any higher. Right? This is all-time high. And we just broke above it, right? And you can see on Monday we had some play at that level as well. So I'm going to mark this level and go bullish above, bearish below, right? So this is how we understand the communication of the market. The market doesn't communicate through words, obviously. It communicates through market structure. It communicates through trends. It communicates through graphical presentations, price patterns, and chart patterns, right? So we have to identify levels of interest, levels with high amounts of volume and liquidity, and understand who's taking control of the level. This is where our edge lies, right? So 617 was a previous all-time high. We closed above it on Tuesday. So going into Wednesday, the pre-market plan is such where I need to identify who is taking control of the level. There's 2 scenarios that can happen. It can either be a bullish day or a bearish day. That is what happens most often. So that is how I view the market. It's all about remaining in a probabilistic manner, never assuming, going, okay, most often there's going to be a level of interest. How can I figure out who's going to take control of the day? Who's going to show dominance? Is it going to be buyers? Is it going to be sellers? Right? And now this brings us to our 3-step criteria. So price opens up here, right? And real quick, let me just go over to the Discord and identify exactly where I got into the market. Right here. 10:01 a.m. I'm in the market short, right? So basically price comes into our level, 617. So now that we've came into my level and we're bouncing in between 617 and end of day, which is previous day close, it's now up to me to understand objectively, right? Without predicting, without assuming, right? I need to be able to understand using my tools who's taking control of the market. So how do we do this? Well, number one, we use our critical level. Who's in control of it? Are we above open print? Yes. Are we above 617? Yes. Are we below end of day? Yes. Right? So what this is telling me here is that buyers might be present, but sellers are not allowing them to close above the previous day close, right? So the market is communicating to me and it's telling me, hey, buyers are here, but sellers are showing a little dominance. So there's no trade here, right? Now, my second criteria, the moving average cross, right? What color's the cloud? Is it green? Is it red? You can see here, the cloud is now red. It's went from green to red. This is a cross. This is the second step in my three-step criteria, right? Number one's open print. Number two, moving average cross, right? I need to see the cross. It's symbolizing, right? It's showing me that there has been a shift in market conditions. Very simple way, right? To talk about how the market communicates to us. Guys, moving averages is our translator. It's our dictionary. It literally helps us understand who is taking control of the market, who's in control, who has the ball, who's showing strength, who's showing momentum, who is dominant. Is it buyers? Is it sellers? Is the cloud green? Is it red? I know it sounds very simple, but guys, if you can learn to view the market this way, you will do 10 times better. You will be way more present, right? So, okay, prices, the EMA cloud is red. We've now fallen below open print. Open print is this blue line right here, right? This is the open morning price, right? This is the first print of the day, right? Once again, the critical levels have massive significance for one reason and one reason only, their volume. Why is volume so damn important? Because volume is going to magnify large money's behavior, right? Volume is the microphone every time large money speaks. And if the market's communicating to us, we have to listen. We have to hear it. We have to see it. We have to identify what large money's doing. This way we can then follow suit. We can follow trend. We cannot move the market. The banks do. So it's up to us to identify what they're doing. This gives us high probability setups. This gives us extremely good trades, right? And it takes a lot of the pressure off, right? So once again, open print, end of day, 617, we fall below it. So let's go back to the Discord and I'll walk you through this step by step. And this is why the Discord's so effective. This is how I communicate to my team, right? This is how they could see exactly what it is I'm doing, thinking, and viewing, and how I'm executing it, right? So for anybody that wants to get involved, you already know what to do. Click the links below. This way you can learn with a team and really level up, right? So at 10:01 a.m., I'm in this short. Why? Well, let's go back to the three-step criteria. Step number one, open print, the critical level, the volume, the liquidity, the microphone, right? We identified it. Step number two, the moving average cross, right? This is the 5 in the 21 EMA. This is the EMA cloud. We have gotten the crossover. This is symbolizing a redirection, a rebalance of dominance in the market, right? Going from buyers to sellers. Number three, my favorite and most critical, crucial part of this strategy is the green bar that has been ignored, right? We get a red bar, we get a green bar, we get a bunch of buyers coming in here, and then we get sellers just disrespecting them, pushing price right through that green bar. Once price pushes, not closes, once it pushes below that green bar, I'm in the market short. My stop is above open print. Once again, buyers would, if they were strong, they would not have allowed that to happen. They would not have allowed the sellers to treat them in that manner. They would not be allowing sellers to disrespect their candle that way, right? I always look at it like a boxing match, right? You got the green bar standing up, and then you got the red bar. Uppercut, lays them out clean. Yeah, buyers might try to get up, but they've just been disrespected. And this happened at the critical level. So once again, going back to the microphone, this is large money screaming that sellers are in control. So it's where we take the market short. Our stop is above the green bar. And you can see here, we're starting to get a little bit of a battle, right? We're starting to get some pullbacks. I went short on this red candle. It's pulling back about 50%. I need to be okay with that. I need to allow the market to do its thing, to gradually make its move, right? It's not always going to happen the way I might want it to, but if I stick to the proper principles and follow my rules, the market will give me opportunity, right? So I'm in the market short, doesn't matter. Downside targets here, right, at 59958, and then previous open print. And I'm going to show you guys where I got that here. Once again, it's a very simple way to identify entries, exits, and targets, but it's the previous day pit numbers, right? I whip out the 15. My downside target is literally, think about it, I'm below 617. That's the critical daily time frame level. We're below end of day. We're below open print. My next pit number is previous day open print. Once again, I'm following the liquidity. I'm following where the volume is. I'm following where large money has showed up previously and showed their strength, right? I'm not assuming price is going to go anywhere. I'm going, hey, 8 out of 10 times when sellers hold open print, we're going to make a move down to the next critical level, right? That's just how it works. That's what the data tells me. Therefore, that's the way I trade it, right? We'll go back to the 5 minute here. You can see price just rallied down beautifully. Continuously holding the EMA cloud. We get another green bar ignored right here. That would have been a phenomenal place to enter into the trade once we broke below it. And price literally rallied all the way down to previous open print, right? So it was a really good trade. I was really proud of this. You can see I'm telling the team, hey, stop bump to 600. Looking to add in on the retest. And then target hit right here. Boom. And now I'm going, okay, I'm going to bump my stop here to 599. I locked it in here at 10:41 a.m. So it's a 40-minute trade, absolute banger. And more importantly, guys, it was very simple, very strategic, using the daily time frame, using the 3-step process, right? Critical level, moving average, green bar ignored. I'm out.